doing well, saving some money, and just starting to invest, what would your asset allocation recommendation be for a young couple with a little bit of money that wants to start investing right now?
I think one of the key words that you said, Scott, was young. I think when someone's young, they have time on their side. A young person, let's say someone in their 30s, has 60 years on their investment horizon. And that is a huge, huge advantage because most people who invest only think 1 month ahead or even 1 day ahead. So there's a couple things I'd offer advice as. Number one is over the long term, the ups and downs of the market matter less because everything that has growth grows in value. So I think equity should always be a big part of someone's allocation, but that also should include real estate because land has a good history. And of course, owning Bitcoin or gold or both. The second thing I would just note is the importance of dollar cost averaging. I think many people feel anxious at the top that they have to put all their chips into the market. They don't. They should have a program to invest steadily. And so we always advise dollar cost averaging. So whether that means you make a commitment to buy every month or you buy every time there's a dip, I'd really recommend people dollar cost average. And the third piece of advice I'd give people is that they need to be really patient. And as much as someone thinks buying at the top is dangerous, JP Morgan's private bank has a very famous chart that shows if you bought the S&P only at all-time highs, you actually had better returns than dollar cost averaging in general, meaning it's actually okay to buy at all-time highs because you know you're in a bull market. Of course, there'll be one day when you actually bought and it literally is the high. But if you have 20 years, you never had a negative rolling 10-year period. So as long as you own something for 10 years, you don't have to worry about buying at the highs.
The air is buzzing in the stock market world with eyes keenly set on a towering name in the tech industry, Nvidia. Known for its revolutionary pursuits in artificial intelligence, AI, and semiconductor technologies, Nvidia has long enchanted investors with its remarkable growth. Yet, as 2025 unfolds, whispers emerge of a potential slowdown. Despite Nvidia's recent blockbuster financial performance, marked by impressive revenue forecasts, some investors are hitting pause, sparked by concerns over profit margins and growth sustainability. But what lies beneath this apprehensive surface may just be the spark that reignites Nvidia's legendary momentum. Giants like Jefferies and Morgan Stanley have released forecasts that could change the narrative, all centered around Nvidia's cutting-edge AI processors and data center GPUs. Let's delve into the unfolding story poised to captivate the tech stock universe. Welcome back, everyone, to Investocracy.
Yes, I think some of the initiatives have a lot of positive potential. Others carry with it risk. On the things that carry risk is how the economy will be affected by mass deportations if that happens. The notion of tariffs. Tariffs can be an important tool, but tariffs can be very disruptive to a global economy. And then there's also DOGE, the Department of Government Efficiency, that I think if we were in a crisis moment, DOGE could be extremely effective. But at the same time, tackling government spending is something that I think is extremely difficult and fraught with visibility risk. And I think it poses risks for companies that are big government contractors. So that's what we have to watch. And then the other thing I think that really bears watching is Bitcoin, because I think there is a lot of policy that's being built around Bitcoin finally being more accepted, the sandbox changing for Bitcoin to be something that the U.S. government potentially embraces.
Tom, it's good to see you. I always stop whenever I see you on social. I always stop because I find whatever your thoughts are is worth listening to. Speaking of the U.S. market, 15-year plus bull run, 50% of the world's market cap now represented by U.S. stocks. And if you believe, as I do, the markets are cyclical, are we due for a flow out of the U.S. market into international markets?
our research sort of foundation, one of the keys is the idea that history serves as a really important guide. And what I've been struck by is that if I take the US versus the DAX, for instance, any more than 10-year period, the returns, the nominal returns between the DAX and the S&P should be very similar. And the starting point for non-US markets is a much lower valuation. And in 2025, if we're talking about animal spirits coming back because of central bank easing, and that's a cyclical upturn, well, outside the US, there are many cyclical companies, industrials, financials, banks, exporters that should benefit. And so I'm not opposed to the idea that next year, if the S&P could essentially feel like it's treading water next year, could emerging markets do better? I think so. And, some things to watch are like China, because China is unleashing some stimulus. And if China's leading, I think it does mean the rest of the world does quite well.
And just within our own market, it's been big is beautiful for a while. Do you think, again, there'll be another reversion to the mean where small and mid caps will have their day in the sun?
I'm in the camp that next year it's less about the Mag 7. I think the Mag 7 will produce good earnings growth, and so that's going to support valuations not contracting for the Mag 7. But to me, the case for PE expansion and earnings surprise is coming more from the mid caps and the small caps.
Nvidia's venture into 2025 certainly has the financial world talking. It all started with an unexpected dip, more than a 6% fall in stock price, post the company's fiscal 2025 third quarter report. While Nvidia's revenue and earnings were nothing short of spectacular, doubts began to swirl, akin to the scenario where one perfect avocado in a grocery aisle suddenly causes suspicion about the rest. Investors expressed concerns over pressure on Nvidia's margins, particularly with a ramp-up of its new Blackwell AI processors. Revenue growth seemed to decelerate, one of those moments that make investors scratch their heads and adjust their spectacles. Yet, there's a twist in this tale that makes it gripping. Industry leaders have differing views, playing a sort of financial tug-of-war over Nvidia's future revenue from AI processors. Jefferies takes a somewhat conservative stance, estimating Nvidia could rake in $180 billion to $200 billion in revenue from an estimated 6 million data center GPUs in 2025. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
That's right. I mean, I think one of the lessons of 2024 has been we've seen periods of market wobbling and weakness. We know investors get pretty quick to turn bearish when that happens, but it turns out that these have all proven to be buying opportunities. I don't think there's a lot of signal to me that December's been a weak month. It is obviously disappointing because it should be a seasonally strong period, but if we end down at even S&P 5,900 into year end, I don't think it just changes that in 2025. There's a lot to look forward to.
So what you thought might happen this year being put off. So what does that mean for next year? Let's say the first half of next year. What do you think we're in for? And with valuations and where multiples are right now, with all that in mind, do you think it could be a really positive first half of the year?
I do think that one of the things that we're watching most closely is what happens to CEO confidence early next year. We know they've been cautious for the last 2.5 years. It's really evident in looking at measures like the ISM manufacturing that's been below 50 since October 2022. And that's highly correlated with S&P earnings growth.
Comparatively, the buy-side figures are even more optimistic, stepping well beyond that horizon. Morgan Stanley chimes in with an expectation of $210 billion solely from its Blackwell systems. In stark numbers, Nvidia's data center revenue through the first 3 quarters of fiscal 2025 was a whopping $79.6 billion. Imagine that. It's like having one incredible stand-up comic moment after another, with an audience endlessly craving more. Out of this, GPU sales alone soared to $69.6 billion. Nvidia's momentum shows no signs of slowing in Q4, with projections hinting at $28 billion from data center GPUs alone. As the calendar edges into 2025, Jefferies projects a leap, some might say a gravity-defying jump, of 84% in these sales for Nvidia in fiscal 2026, assuming average selling prices around $30,000 per GPU with room for higher pricing strategies. Nvidia holds more than one ace up its sleeve. There's chitter-chatter and informed whispers suggesting higher shipments, potentially bolstering revenue beyond current expectations. It's a game of calculated risks and bold forecasts, where checkmate could mean luxuriously high earnings. Interestingly, should Nvidia manage the expected incremental $82.4 billion in GPU revenue next year, it brings the anticipated top line to a possible $211 billion. While analysts expect growth across all markets, Nvidia taps into the more optimistic estimates point towards exceeding fiscal 2026's $195 billion forecast. Nvidia, it seems, isn't just writing a new chapter, it's crafting an epic. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
On top of that, we have an incoming administration that ultimately is going to be viewed by markets as pro-business, and I think that reignites animal spirits. And I think the Fed is going to prove to be dovish, even if they're trying to figure out where neutral is. They're still supportive of markets. It's a good combination for I think upside for equity. So, in the first half of next year, I think S&P can get close to 7,000, and that's a lot of upside from here.
7,000. You've made some calls, some prescient calls about inflation, or about the markets based on inflation. Do you think recent worries that it's reheating are misplaced right now?
I do think inflation worries are misplaced. I know there's a lot of folks calling for a resurgence of inflation, and I know for whatever reason January typically doesn't seem to be seasonally adjusted away, so we could see what looks like a surge in January CPI. But to me, the drivers of inflation are wages, and the Fed has said the labor market is not in a place that is inflationary. It's shelter, and we know shelter is really just catching up from the gap between where market prices are, which is not as inflationary, to how the statistical adjustments get CPI to where that needs to be.
In light of this analysis, Nvidia stands out as a compelling choice for investors aiming to expand their portfolios in 2025. It's priced at roughly 32 times forward earnings, a trinket of an opportunity within the highly valued NASDAQ 100 index. Its price-earnings to growth ratio clocks in impressively at 0.98, below 1, shining a beacon that Nvidia might just be undervalued considering its lurking growth potential. Despite a recent sluggish patch, Nvidia appears primed for another wave of ascent. The forecasted prowess of its Blackwell AI processors and data center GPUs paints a rosy picture. Whether you're an investment aficionado or relatively green, Nvidia offers a narrative of promise. What an exciting story it shapes to be for seasoned and novice investors alike, ready to jump at the chance of AI-fueled returns. And now, the floor is yours. What do you think of Nvidia's growth story? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there!